Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm thrilled you're here. And you are going to get tremendous value from the dynamic, fun, energetic woman that I'm interviewing today. Her name is Sandhya Seshadri, and I pronounced it right that time. And she is a hitter in the multifamily space. She's an LP in over 3,500 doors. She's done numerous projects as a GP. She's LKP on deals, and just a real delight to talk to. So I'm really excited to have her on the show. Welcome.
Thank you so much for having me on your show, Rod. I have been such a huge fan of your Lifetime Cash Flow podcast, and it's such an honor to be here. Thank you.
That's very kind of you to say. And I know, we were just talking before we started recording that we met at a conference in Houston, and I actually remember you, and you absolutely made an impression because I meet thousands of people a year, and I don't remember what I had for breakfast. So that's quite a statement. But so let's start with, because this is your first time on the show, let's start with having you tell us a little bit about your history. I know you started at Texas Instruments, and just I didn't do a great job with your bio, so do a better job for me, please.
Thank you. I moved here from India, like a lot of immigrants. And my parents, I grew up in a very middle-class family. My parents were highly educated, but because of the exchange rate, their monthly income was about $60 a month. That's 60. And I dreamt of moving to the United States for college. And the only way I could do that was by getting very high test scores to win a full ride. And I came to Dallas to Southern Methodist University. I got my degrees in electrical engineering and immediately was employed by Texas Instruments. And it was a great company, and they paid for me to go back and get my MBA, which is where I got my business knowledge in addition to my technical skills. Because very quickly, as I worked in the company, I realized that as technical and intelligent as a lot of my peers were, we were being told what to do by all the marketing and sales types. And I really wanted to understand how they arrived at those decisions to pick projects, et cetera. So I got my financial background from starting to run businesses there rather than just being in a technical role. And that led me to the stock market. So I spent 2 decades also investing in the stock market to build my portfolio, because I realized that as wonderful as my W-2 job was, starting salary of $36,000, I felt like $1 million. I realized very quickly also that I also had to multiply my money faster, and the stock market was the easy and obvious way.
So what made you decide on real estate?
So real estate was always fascinating in the sense that, 90% of millionaires become millionaires by real estate. But I was not a handy person to do single family rentals. And, I didn't want to deal with the 4 T's, the tenants, toilets, trash, and termites. I didn't want to be called on a Thanksgiving dinner time to go fix a leaky toilet. But when I heard from a friend about apartment investing, where you buy large multifamily, and it leads you to affording a property management company full-time who will do all the work for you in terms of the day-to-day work. Like you can employ full-time maintenance and full-time leasing staff so that you are more of an asset manager, monitoring the financials, being more hands-on in the beginning phase to, implement your business plan. That really appealed to me because that's very similar to project management and running a business, which is what I did in the corporate world. So then I attended weekend seminars, networked with a lot of people, and started investing passively because I had a lot of retirement money when I quit the corporate world to go into the stock market full time. And so I took that retirement money and invested passively in a number of different deals to network and get to know the business a little bit, but without taking on all the risk myself. And that's where I met my future partners. And for my first deal, especially, I didn't want to do all of it by myself. Multifamily is a team sport, and I really wanted to learn it and do it right when I was raising money from other investors. I really wanted to do it right by them. So I partnered with more experienced people and offered to roll up my sleeves and do much of the grunt work while they made the decisions. And that's what led me to having my first syndication 2 years ago in August of 2019. So
love it.
That was
Love it.
86 doors and $6.75 million. And it
Love
was
it.
just the right size to afford full-time staff.
Yeah, no, that's right at the squeaky point,
Mhm.
minimum size
Mhm.
to be able to do that, unless you're in a very, very high rent area. Now, you said a couple of things that I'd like to hammer home for my listeners. One is, obviously this is a team sport, and most people start the way you did. And well, many start in the LP world, as a limited partner to learn a business like you did. But even leaving that aside, most people do start aligning with an experienced operator that's done deals before. And, I think that's one of the reasons my Warrior program has been such a success. My students are approaching 46,000 units owned, and I've been teaching a little over 3.5 years, which I'm incredibly proud of. But they do a lot of deals together, so they have that camaraderie. And I know, you're in an environment like that as well, and it's so helpful to be able to lean on other people. So, I want to circle back to something because you talked about this first deal that you did, and that first deal is always the hardest. It's the scariest. It's the most stressful. So maybe you could talk about that a little bit and help my listeners who haven't done one yet, but want to do one, and maybe give some insight.
I think the biggest thing is to figure out what is your area of expertise or what you want to do, and offer that to an experienced sponsor and answer the question, why should this experienced sponsor partner with you? What do you have to offer to them? Because you need them more badly than they need you.
Yeah.
And so in my case, I live in Dallas. I've lived here over 3 decades. So I really know my local market very well. And both my partners were located out of state, but they wanted to get into the Dallas market. So this was their first deal in Texas and in Dallas. And so with them being away, I knew that I could be the hands-on person helping them, saving them some trips. Something goes wrong tomorrow or the vendor is showing up tomorrow. I could be the boots on the ground for them. And at that time, I was full-time in the stock market. I was no longer in the corporate world. And so once I dropped off kids at school, it was a perfect fit for me. I'm there 9 to 3. I'm available to be on site at the property. I could go 3-4 times a week if necessary. So that's what I offered. And I could leverage their resume so that when I tried to go raise capital, I could use their resume to say, yeah, I don't have the experience, but I have the time and the motivation to work hard. But guess what? You have these experienced sponsors who'll be making all the decisions. So I'm not, a rookie here trying to fly solo,
You use the we word. You use the we word. We have X number of units, and we're partnering together on this deal. And I love it. And it's funny. We've got an asset in San Antonio right now that we're raising money for, and that's exactly the same situation. One of my students brought it to us. He's the boots on the ground. He lives there, and it's a phenomenal deal. And so he's there every week checking it out as well. And I love what you said about see what you can bring to a team or to an operator, because guys, there's so many ways that you can add value. And so you've got to look at what you're good at. Like in your case, Sandhya, it's project management, which is a huge, plus, because the bulk of the work is done after you purchase the property, and it's the asset management, which we're going to dig into in a minute. But maybe you're the person that's a great communicator and you develop relationships with brokers, or you're maybe in investor relations, you build investor relationships, or maybe you're super analytical and you do the analysis, or you're a little bit of all of them. But that's the what you said about adding value, and that's how you should approach this, guys. Is to look to see how you can add value to a team or to a person and align that way. And of course, you lived in Dallas. In fact, I'm going to be in Dallas. I'm flying out tomorrow. We've got 3 assets there. We'll be looking at, and I'm doing a conference there this week. But anyway, that's such a common and effective way to get yourself in the door here with this business. So anyway, so let me ask you this. Anything else about that first deal that I cut you off a little bit. Anything else about that first deal that you'd want to say? I see it with my students all the time. It takes the longest. It's the hardest. And then once they've got it done, it's like the next thing I know, they have 4 or 5 of them. It seems like they're like dominoes after that. Would you feel the same way, or what do you have to say about that?
Yes, brokers take you much more seriously once you have that first deal and you can talk intelligently about the underwriting, about the business plan, about the asset management aspects of it. You become, you learn a lot from your local property management company as well in the process. And so as my first deal, I wanted to learn everything I could. There wasn't one aspect that I said, I'm not going to ever do it. So I wanted to learn all the parts of it. So I underwrote the property independent of my partners. I did my comp studies independent of my partners. I realized that they were also bidding on the same property. And I said, instead of us competing, why don't I join you? And this is how I can help you. And that's how they added me to their team, is how I look at it. And so this is the way that you find your first deal, is by adding value. But beyond that, for me, before I can go and raise money from investors, I really need to be able to talk about this intelligently, right? So the education is so important, like the kind of program you offer. You have to be strong in your underwriting. You have to be able to explain the business plan, because I was raising money from a different set of investors than my partners. So I have to be able to talk about it intelligently, even though we did a webinar together, et cetera. You have to be able to answer questions. So I think the more education you get, the more confidence it builds. And then you can leverage the resume of your partners to say, yes, we will execute this, not just because I'm eager and helpful, but because I've got a wise person helping me along. I'm a co-pilot now. I will be my own, pilot one day.
Yeah. No, it's something you said to trigger something I say all the time, which is you build your competence first, which then will equate your confidence, which then equates to your ability to influence. And really, it's that trajectory. And one other thing I want to hammer home, because you're really dropping some great info here, is the value of the property, your third-party property management company. I can tell you, when we go into a new market, and we're in 6 MSAs or 7 right now, and I think we get more information from interviewing third-party property management companies than just about anything else we do there. And I've got, guys, I've got a resource that I give. It's a free book on the questions you should ask a third-party property management company. I'm just looking for it here so I can see what the code for it is. But yeah, how to hire a third-party property management company. It's got every possible question you can think of. And if you want it, just text the word management to 72345 and I'll get it to you. But learning about how they market there, how they what they do in the interview process, what their ongoing training looks like, and so on and so forth. So I just want to hammer that home, because you really are partners with them. Wouldn't you agree, Sandhya?
They are your partners.
Yeah.
Without them, you cannot execute your business plan. It's very important that they're on board on all of your numbers and your business plan for that market. Like, you might think, I'm going to charge $50 for covered parking and $25 for reserved parking. And they're going to tell you, guess what? Your property is large. There's ample parking space. Nobody else in this demographic market does it. So don't waste your time. That's not going to work. And there you go. That might be a nice $10,000 that's going to be shaved off of your, first year. So it's very important that they're aligned with you before you even submit an LOI on a property. That's a letter of intent.
Right. And they can review, they'll review your expense line items to see if they're in line with that local market, because they do change market by market. Well, this is a great segue into asset management, which, I know is your superpower because of your project management experience. And so let's talk a little bit about what that means. Let's talk about what it means and what it's comprised of. And maybe you give some tips for some of the KPIs that you study on a consistent basis with your assets. I know that was a lot, but.
So at a high level, for any kind of asset management, business management, the first thing you want to know is, what is your top line revenue number? What is your expense number? So you have certain targets you want to hit every month. So your top line revenue, your expenses, and so your net operating income. Because revenue minus expenses is your net operating income. And the value of your property is based on your net operating income divided by the cap rate. So another thing you want to agree on with your property management company is what expenses are considered operational expenses, which occur every month, like your pest control, your trash, those kind of utilities, et cetera, versus what is a one-time expense that should go what we call below the line, and what's a capital expense, because the way your accounting is done definitely influences the price of your property when you're eventually getting ready to sell it.
Yeah.
The second part of it is, besides the financials, is the business plan itself. Are you and your property management company in complete agreement on your business plan? Do they agree to the rent increases you're planning and the method you are going to deploy to achieve that, right? Everyone says, I'm going to do these fancy interior upgrades. I'm going to spend 5 to 7K per door and achieve this interior upgrade. Well, if you're 95% occupied, when is your opportunity to go in there and do this upgrade? And does your submarket support granite countertops? What kind of a property is it? What is your rent? What is your median household income to support that highest rent that you're planning there, right? So maybe you don't quite need to make it into a palace, but you need to make it into a nice, clean, comfortable place. So that's got to be a complete agreement. Minds are aligned completely with you and your property management company so that you know, even before takeover, okay, day one, this is what we're going to do. The first 2 weeks, this is what we're going to do. These are the CapEx projects we're going to do right away. These are some that we're going to postpone after doing, like parking, for example, right? Reserved and covered parking is not something I would do right away because you need to do a survey of your renters and see if that's something they want to pay for. Versus, laundry or Wi-Fi are examples of other income you can do right away because those are expenses that are already part of your tenant's budget. Everyone has to spend money on laundry. So if it's a coin laundry machine, it's $3 per load. So instead, if you install washers and dryers in their units, hey, they'd be willing to pay the $50 for it, which is pretty reasonable. And the same with something like Wi-Fi. Everyone watches Netflix these days, right? So if they're spending monthly internet service of a certain number and you already know what the local Spectrum or whoever charges for it, and you're able to install your own equipment and offer it at a lower price or a free promo, okay, first month free, and then try before you buy concept. Those are all reasonable expenses that are already part of a household's budget. So those should be easier to do right away versus something like a covered and reserved parking. I'd wait and do a survey before I implement that.
Yeah.
So
concierge trash, valet trash. Yeah. In fact, all three of those things are things we're doing at that San Antonio asset. Now we do need to survey on the parking though. But the laundry, all of that is kind of funny. I was just checking off the boxes as you're saying those things. By the way, guys, her website is multifamily4u.com, multifamily, the number 4, YOU.com. But let's keep going here. So on asset management, you're aligned with the property manager. So besides the high level income, gross income versus gross expenses and NOI, what other sorts of things do you take a look at on whatever basis you speak with your management company, if it's weekly, monthly, what it is? Could you speak to that a little bit, please?
Yes, one of the things we track also in terms of KPIs is the availability report. So it tells you what your occupancy is, your vacancies, how many renewals are coming up. And today we're speaking in August of 2021. So we're coming to the end of what we call the peak leasing season. So if I have a lot of renewals coming up in September, October, November kind of timeframes, you want to be careful about bumping rents on those things. So that's a strategy you want to discuss with your property management company as to renewals during peak versus off-peak periods and how you want to address that. Do you want to take this opportunity to actually get some units vacant so that you can go in and do full upgrades? Or when the renewals come up, do you want to stagger them a little bit so that most of these come off lease during a peak leasing season? Or you don't have, 16 renewals all coming up within a month's time. So your team doesn't have the time to go in and do all the make readies quickly enough. So you have what is called time that is down when the unit is not available to be leased, right? So your turn time, your upgrade time, and therefore the loss to lease from all of that.
Let me interject. Hold on 1 sec. What she just meant was, guys, what you might do is you might do a 13-month lease, a 14-month lease, a 15-month lease to make sure that they expire during peak lease time. Sorry, I just want to hammer that piece home. Please continue.
That's a very important thing to remember is to do 30. You could even do shorter leases, like 10 months, so that the lease expires in July instead of September, et cetera. and whether or not you want to retain that tenant. So one of the things I do is we go through the rent roll, and I have my property management company start to color code all these residents as green, yellow, red, the ones who are always the problem tenants who give them a hard time, don't pay on time, etc., versus the ones who are really nice and friendly, and we want to try to retain them by offering them some kind of an amenity. So the other thing we do is in terms of incentives and bonuses to our leasing staff, we try to give them something more, a bigger reward for retention of the good tenants than just for getting new leases signed at pro forma rent. And by pro forma, we mean the rent numbers that we have in our underwriting to achieve our business plan numbers. So renewals are very important because it promotes retention in your community, and it's a less expense for you. So we offer a freebie when a good tenant comes up for renewal, such as, would you like a new fan? Would you like a new refrigerator? Whatever it is, as an incentive, and we let them pick. And then we say we have a little thank you gift for them as well when they renew with us, if they're a tenant that we really want to retain, because we truly appreciate them. They are our customers, and without them, we wouldn't be in business. And just like a restaurant receiving its customers and doing a good job of customer service, it's the same thing. You take care of them, you maintain your property well, you make sure your maintenance is aligned on your priorities, which is it's a leaky toilet, it's a leak somewhere. That's always the highest priority, right? So that's another conversation to have with your property management company is what weekly, one of the things we track are the work orders. What kind of work orders we have, what are the maintenance problems, what are the complaints we read on Yelp or anywhere on that property, even before we took over, and how we want to address them.
Yeah. That's such an important thing. So you want to ask, how many open work orders do we have? What's the aging on them? How long have they been sitting there? What's, and why? And address that, because if you could be doing a great job leasing, but they're going right out the back door if they're unhappy, if you're not taking care of their air conditioning or their plumbing or whatever. Yeah, love it. Starting out in your career in this business, were there any like aha moments, like where the light bulb went off? I know I didn't prepare you for these questions, but any like epiphanies that you had as part of this journey of yours? Does anything come to mind when I ask that?
Yes. And so just like any other newbie, I tried to underwrite deals and come up to the whisper price. And I probably underwrote, over 100 deals in my first few months in the business. And I realized that there was always a gap. It was always $500,000 to $1 million off from whisper. And I just couldn't sort of cross that barrier to say, how do I do this? How is somebody else able to pay? And that's where I realized I need a partner who's got the experience. And I also need a property management company who can give me some creative ideas to find value in these deals. And those were like my two biggest
those are
reasons. Huge. Yeah. Those two things basically broke that barrier. So in my most recent deal that we just acquired 3 weeks ago in July, we were all on a bus tour, several of us, and there's about 200 people looking at this property listed for sale by a very major popular broker in the Dallas area. So I knew they would get a bunch of offers in there. So right away I knew, okay, if the whisper price is, let's say, 17.5 million, I knew I'd have to go at least 18.5 to have any shot at winning it. So initially, even in my initial underwriting, I priced it at 19 million and said, what does it take for me to go to 19 million and still provide a return for which my investors would be interested? How high do I have to go on my rents or other income, or what can I creatively do to quickly get to that number in the first 12 months? And one of the things that resulted from it was my realization that no matter how low the interest rates were, an agency debt loan is based on the T12. So agencies give you a loan based on the last 12 months of revenue, that those financials, versus a bridge lender is going to lend based on the future projections as well. So I knew I could get better leverage from a bridge lender than the best terms from Fannie or Freddie. And it was definitely a risk I decided to take on to be more competitive. And that was the difference, because with the agency debt, I could only get about 70% return to my investors, versus with bridge, I got higher leverage, nearly 80%. And so I could return a better amount to my investors.
Yeah, the higher the leverage, the better the return. But of course, the higher the risk as well. So what kind of a term did you get on that bridge debt?
We were able to get 3 years, which is the standard for any bridge loan, and 2 extensions.
Okay.
And we were able to we bought a rate cap for 2 years, but after 18 months, I'm free to refinance it. Okay. And that was the flexibility I needed, because we were stuck with a lot of deals that were acquired back in 2019, 2018 timeframe that had a very high yield maintenance penalty from the typical Fannie loans. And so now they're stuck with 5% plus interest rates that no one wants to assume. And we didn't want to be in that position. So we wanted to take over this property, implement our business plan in the first 18 to 24 months and decide at that point if we wanted to refi or we wanted to exit and return money back to our investors. Yeah. And that flexibility was available from a bridge loan. The other thing we had looked at was a Freddie floater, but that wasn't as competitive in terms of the LTV or the LTC, I should say.
Right. Loan to cost.
So the loan to cost percentage that they could lend us was very low on a Freddie versus a bridge loan.
I see. Okay. So I'll ask you the question that I regularly ask, people on the show, just to see if your answer is along the same lines or if it's a little different. If you could go back in time and tell your younger self something, maybe even before you got started in real estate, but about real estate, is there anything you might do differently?
I wish I had started in apartment investing earlier. Yeah. But also, I wish I had trusted my instincts more and been more confident of my background and how useful it is here, because my math skills are great. My asset management is strong. I can be at a high level, but I can also drill down to details. I wish I had been more confident of myself right from the beginning and not sold myself short.
Great answer.
So that's the biggest one.
Great answer. Great answer. In fact, you know what? I just did an Own Your Power clip on self-confidence. I literally this morning, I do these clips. You may not know this on my podcast. I do a clip, motivational clips every week. And I literally just did one on self-confidence.
Yeah.
So what words of wisdom, I have so many listeners that fear failure or have the self-confidence issues that know they need to do something. They love real estate, or they believe they love real estate, which is a key piece, guys. You either love it or you learn to love it, or for God's sakes, go do something else, because life's too short. You agree with me on that one, Sandhya?
Totally.
Yeah. But what words of wisdom would you give someone that's on the fence that knows they need to take action? What would you say to them?
Don't chase after a shiny object.
Mm-hmm.
Don't worry about what everyone else is doing. Do what is your comfort zone. There are people doing a new deal every month. I'm not comfortable with that, because I know how much work it takes to take over and manage a property and return money carefully back to my investors. So I go at a pace that works for me. So don't worry about what others are doing. Do what is comfortable to you. And for me, that meant doing my first deal with people with more experience than me. So trust your instinct, write out all your fears and concerns, and say how you address every one of them. It's just like basic risk mitigation you do with any project in the corporate world. You write out the risks and you say, what am I going to do to minimize these risks so that I can go in with confidence, look myself in the eye and look at every investor in the eye and tell them that this project is going to be a huge success, right? What does it take for that to happen? And in my case, it was experienced sponsors, knowing my market, having a PM company that knows what they're doing, et cetera, to run my own property. But first, starting out passively and doing a few passive investments with retirement funds, because that's money I can't put into my own deal anyway. So I learned from those passive investments, took the best of each of those sponsors, and now I have all these people available on a phone call away to help me when I do run into any problem that I've seen in one of those projects.
Sure.
The connections are invaluable.
Since you said that, let me ask you a question. Have you had any early failures, or, I call them seminars, that maybe have contributed to future success or gave you a good lesson? Can anything come to mind when I ask that question?
Yes, I was very much taken in by someone who was great on social media and with whom I badly wanted to have a connection because they were local to my area and they had a skill that I did not have, which is construction management. So I trusted them and invested in their deal passively. And unfortunately, that's my worst performing deal. So right now, what I'm telling myself and other friends is that construction management is one thing, but it's not the same as a high level asset management, which in our COVID era that we've all been a part of in the past 18 months is a focus on delinquencies. If you're an asset manager or if you're a passive investor talking to an asset manager, you need to know what is their plan to address delinquencies. Are they familiar with the local courts and how friendly they are with respect to evictions? How else, what are the local resources available to help these tenants get back on their feet to pay that rent? Because if you can't collect the rent and you're delinquent, you shouldn't be spending money on your other capital projects. You should be holding on to it, which is what we did through the March through June of 2020, right? So that's an important lesson learned. Yep. Is not just trust, but also verify, but asking for a reference from a passive investor in those deals.
Yep. Good. Well, listen, I really appreciate you coming on the show. You've added a ton of value. It's a real treat to see you and have you here. And, I'm sure that we'll see you at an event in the very near future. But thank you for coming on and sharing your wisdom, Sandhya.
Thank you so much, Rod. It's been such an honor and pleasure. Appreciate you.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our Warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our Warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 72345 and we'll set up a call so you can check us out and we can check you out. That's mentorwithrod.com or text CRUSH to 72345.